We know that Goldman Sachs and Deutsche Bank and all the rest of them are into betting on your food supply, the whole planet. They're putting us a form of derivative markets, and they're selling it on ideas of who might go down next year, bad crops, and putting these bets on them in hedge funds and all the rest of it. Same kind of deal that they've done with housing and all the rest of it too. Anyway, it says Goldman Sachs Group and Deutsche Bank and JP Morgan Chase, which bundled and sold billions of dollars of mortgage loans, now wants to help investors bet on people's deaths. Pension funds sitting on more than 23 trillion of assets are buying insurance against the risk that their members live longer than expected. They probably will have got us down typed with our genes and all the rest of it. They'll know who's going to die first with this disease and that disease. And after all, we've all had the shots and so on, and we're getting that rotten food full of their chemicals too. Anyway, it says banks are looking to earn fees from packaging that risk into bonds and other securities to sell to investors. The hard part is finding buyers willing to take the other side of bets that may take 20 years or more to play out. Well, that's nothing for the big boys with the real cash. Banks are increasingly looking to offer derivative solutions, said Nardeep Sangha, 43 Chief Executive Officer of Abbey Life Insurance, a London-based Deutsche Bank unit that helps pension funds manage the risk of retirees living longer than expected, making the long-term maturity of the risks palatable for investors, including sovereign wealth funds, private equity firms, and specialist funds, is a challenge. As insurers reach the limit of how much pension fund liability they're willing to shoulder, companies such as JP Morgan and Prudential plc last year set up a trade group aimed at establishing and standardizing a secondary market for so-called longevity risks. They're also developing indexes that measure mortality rates and securities to let pension funds pay fixed premiums to investors in return for coverage against major deviations from projections. We're living in hell, folks. Anything called humanity is gone, or humaneness is gone out the window a long time ago. Or perhaps these characters never had it in the first place. It's the latter, I suspect, personally. Swiss reinsurance company, the second biggest reinsurer, sold the world's first longevity bond in December in what it called a test case to sell risk to capital markets. Goldman Sachs, based in New York, and Deutsche Bank in Frankfurt have set up insurance companies that promise to pay pensions if retirees live beyond a certain age. They typically receive a portion of the pensions plan's assets in return. The banks, along with Morgan Stanley, Credit Suisse Group, and UBS AG, are looking for ways to offer this risk to investors. Ultimately, reinsurance capacity for longevity risks will run dry, and that's why it's imperative that as the market grows and develops, it's able to bring in new types of risk takers, Sangha said. The obvious channel is the capital markets. And you thought money was just a simple little thing, not with these crooks at the top. They smell all these alleyways you can't even see. They smell them. It's just incredible what's running the world. Really is. Really is.